All right, so overnight gap up, pushed up above the expected move, and we closed above delta neutral, but we still don't have a reversal. Almost got one earlier, but we're still just a bit short. Still room to the upside to test 80, 85. It looks like a lot of the positionings moving up there today. And then, the next target after we break like 55, 85 would be 5600, where gamma neutral is. Futures also kind of struggling to break through the upside of the long-term trend here, but I think bulls will be better positioned to make the move overnight, when they don't have to worry about the hedging the sold calls, and then they can open and squeeze those calls if they open in the money. Not a lot of data tomorrow, so there shouldn't be anything really stopping the bullish momentum that we've got going. Dollar pretty flat on the day, but yields moved up, especially at the top end of the curve. 10 years back above 4.25. So we're getting like slightly tighter financial conditions as the market moves higher. Correlation broke down quite a bit on both the 3 and 1 month, but started to trail off a little into the end of the day. We might see a more concerted push into that tomorrow. They got the forward yield on vol back down under 0%, and some negative 1.4 now. We're getting a little bit more inversion in the yield curve, but not a lot right now. We still haven't kind of knocked off that move from last week. But the carry trade is getting leveraged up despite that. However, the yen above the dollar today. Bond vol's been picking up a little bit, but not very much, and is uncorrelated with the move in correlation on the 3 month. Looks like a little bit more tail risk hedging picked up on Friday. 69% of the S&P under its 20-day moving average, and correlation between VIX and VIX futures, cash VIX and VIX futures, is now at positive 36.3% for this week, which is quite the move up. And we may be getting into a period where we start to see more significant moves in volatility going forward. And Fed Fund futures looks like we're pricing in about 0.61 rate cuts. So rate cut expectations actually trimming a little bit over the weekend, down about point 0.3. Still pricing in 2 rate cuts by January, but maybe starting to price out a rate cut at the current meeting. Obviously, balance of trade this week and GDP will have a pretty big impact on that. Sorry, not balance of trade. Goods trade balance could have a pretty big impact on that, and the expectations for inflation over the next like year. Part of this move is due to today's auctions, both of which came in pretty steady for the 3 and 6 months. So the bond market, kind of like treasuries market at least, kind of in disagreement with the Fed Fund futures. Like Fed Fund futures are pricing in 2 rate cuts by the beginning of 2024, but treasuries are only really pricing in one, if that. It's up 1%. Calm down. What is Zion didn't even have earnings, right? Their earnings are tomorrow morning. Relax. All your money will be gone at market open. Not now. 76 volume after hours. Ridiculous. According to the chart you posted, it's today after hours. Are they? Oh shit. Oh, it is. Son of a bitch. A bank earnings at night? Well, I guess let's see what's gonna happen with it.